Gold peaked. But more importantly, these power like Oklo and a lot of these names that have no revenue, they started to get hit hard. And a lot of these names, quantum names, nuclear names, they're down 40 to 60%. And these were big call option names. These were big things. Then you had Palantir come out. So you can see kind of the dominoes that are playing out that lead to a rotation. Now, I wrote a paper this week about CoreWeave. There was a great post by someone, Kai Wu. I don't know if you've ever seen him, but he posted something about how companies that have lots of CapEx, how they typically do. We're at a weird point in the cycle. So the S&P is barely off the all-time highs. We have all these companies that have done a tremendous amount of CapEx. And now with CoreWeave, we actually saw a company that had to cut their CapEx guidance, not for all the bubble reasons, but because we have shortages of physical stuff. And so I believe
tariffs, panic selling, doomsday headlines don't match the facts. Key large banks hit new highs. The S&P remained up for the year, and much of the selling has been concentrated in high beta, low revenue quant names and heavily levered call option plays. The sell-off began after extreme moves in a few mega cap stocks, Oracle called out, accelerated with macro events, Fed action, and was amplified by structural market forces. October tax loss selling, year-end bank risk management, November, buyback blackout periods, hedge fund performance pressures, and retail getting trapped. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
All right, so this will be my chance to kind of spend at least the beginning part of this talking about things that I've known and learned over the years about trading and about markets. And I think for people, I know there's a lot of people who trade and they don't think about the macro environment. So normally, like you said, when Liberation Day is happening, it's easy for people to kind of think about, well, this is happening because of this. I don't believe this is rational. Let me go. That's not what's happening right now. So you mentioned a lot of things that are falling. Here's what's not falling. The S&P 500 as of yesterday's close was down 1.5% for the month, and it was still up 14% for the year. Goldman Sachs and JP Morgan made new all-time highs in the last 6 days. That's not a bear market. So I think I'm gonna bring a little bit of insight to people on what happens this time of year, because a lot goes on in October, November, December that I think people that are trading should kind of keep in the back of their mind, take it out every year when they get into it. And this leads to a personal recommendation, you know, for everyone, especially in Bitcoin, since a lot of the audience is there. We get caught in these emotional moments. And then 6 months later, if Bitcoin's 120,000, everyone forgets them. So these moments happen. They're part of just our lives and they're part of trading. So the way my father always taught me, hey, if the way you're betting's not making sense, then just sit out a couple races. And because he was handicapping horse races, he said, wait until you get things that you really like. So if you think something is off at is off on the board at 20 to 1 and you think it should be 5 to 1, that's a good spread. If you think something should be 5 to 1 and it's 7 to 1, sit that one out. Like, don't look for a little bit of value, look for big value.
The fat pitches that Buffett would
The fat pitches, that's exactly it. And I don't think the panic at the market level is there, but here's what's happening. We've seen since Oracle. So I want people to go back to the day, because I was actually at a Robinhood event the day that Oracle released earnings and it gapped up 30%. One of the largest moves by a big stock ever. It may have been. It was a 30% gain for a stock that approached that day $1 trillion in market cap. Since that day, it peaked and it's been going down, and now its debt is selling off. CDS for it is going up. So we've hit a new point, and this started with Oracle. Then we had the Fed rate cut in September. And again, a lot of things shifted. And I've talked on here about unwind trades that were happening first at the quant level, but now it's starting to spread. Retail also got hurt. Now, when retail got hurt is when we started to get into October. Gold peaked. But more importantly, these power like Oklo and a lot of these names that have no revenue, they started to get hit hard. And a lot of these names, quantum names, nuclear names, they're down 40 to 60%. And these were big call option names. These were big things. Then you had Palantir come out. So you can see kind of the dominoes that are playing out that lead to a rotation. Now, I wrote a paper this week about CoreWeave. There was a great post by someone, Kai Wu. I don't know if you've ever seen him, but he posted something about how companies that have lots of CapEx, how they typically do. We're at a weird point in the cycle. So the S&P is barely off the all-time highs. We have all these companies that have done a tremendous amount of CapEx. And now with CoreWeave, we actually saw a company that had to cut their CapEx guidance, not for all the bubble reasons, but because we have shortages of physical stuff. And so I believe that we're in a late cycle type trade. Commodities, the Bloomberg Commodity Index made a 3-year high this week. That's not typical in a slow growth period. The market is rotating away from what has worked now for 2 to 3 years. And these are companies that, to me, have made a peak. So growth as a factor has made a peak. And I believe now we're going to be in a period where there are new things that are going to be leadership. The reason I said November is an important time period, October is when mutual fund tax loss selling typically happens. 50% of the S&P 1500, believe it or not, is down for the year. So there was a lot of selling that went on in that caused some of the disruption. Then you get into November, you've got the bank's end of year. And as traders and someone who worked at a bank, you have no upside in November. So you don't take as much risk. That leads to, if people come in to buy call options, you're like, I'm not going to get in a position where I sell too much. So you start widening out your markets, people get trapped. At the same time, buybacks start to slow down because we go in the blackout period and they're really important this time of year. They're starting to kick back in now and they're gradually every week going to get bigger, but you end up with that kind of risk. And then you get into the hedge fund side. If you're someone who's had a good year this year, and I've talked to some of these portfolio managers over the course of the last couple of weeks, they don't want to lose the bonus that they have, and they're paid on a performance. So if they start losing money when the AI trade and the momentum trade unwinds, they're more likely to sell out of things. So when you put all these factors together, and then you add in the fact that the people that have lost for the year are getting stopped out, I believe there's a massive rotation that is going to continue to go on. But we've already done enough damage for these names that are down 40 to 60%. Oracle's already gone down enough. We have Oracle's earnings coming out in 2 weeks. We have NVIDIA coming out next week. I think the market will find a way to stabilize. And then once people kind of...
Bitcoin moves from being dominated by ideological holders and speculative retail into broader diversification and utility. Remittances, tokenization, stablecoin rails, AI agent commerce. It's price dynamics and narrative change. ETF inflows, treasury buys, and structural adoption shift Bitcoin toward being an investable asset class rather than just an insurgent narrative.
So when I wrote the paper about the IPO price, within the paper, I said, it still may go lower in the interim. And the reason is because of what you said at the beginning of the question, which is there needs to still be more distribution from the original people that bootstrapped this asset. It needs to happen. Part of it needs to be opportunity cost. Part of it needs to be diversification. But every single day, the ETF inflows continue. The treasury company buying continues. There's a handoff on things that didn't exist to what does exist. A16Z put out their State of the Crypto report. I'll be going through about 7 to 8 of the slides because I think they get into the point that I'm most interested in. So I'm a macro person. I don't care about, I care what it does each day. But my vision of it is not about what it does this year. It's not even what it does next year. If we're still at 94,000 next year, trust me, the sentiment will be even lower and people will be hysterical. But I believe the volumes are going to increase. The network effects are going to happen. Caitlin Long is a beloved person in the space because of the fight she's shown. She's reiterated her thing, which I agree with too. Money velocity sucks in the traditional finance world. There's so much money trapped with the few that own it. So it's very similar to Bitcoin, meaning highly concentrated. Well, the trad fiat world is highly concentrated and owned as well. Most of the assets around the globe are in the top 1% of people. It's actually to some degree worse in terms of the concentration. And a lot of that money doesn't move. It sits in real estate. Tokenization is going to happen. Stablecoin volumes are going to happen. AI agents are going to happen. Those three things are the holy trinity of the digital economy taking over the traditional finance world. That's not a guess on my part. That is going to happen. We still have 3 years left of this administration. We haven't got the Market Structure Act in. So when clarity is in, for everyone who's doubting where it's going, that's a trader mentality, and that's fine. You have to have that mentality at this point because you got to preserve if you're trading. If you're someone who's thinking about where it's going to be 5 years from now, 10 years from now, like I am, 20 years from now, I fundamentally believe what I've said repeatedly on every podcast I go on. I'm interested in the way artificial intelligence is going to change the world. It is disruptive to the wealthy. It is disruptive to everyone who's had a moat around their lives, who's had a moat around their business. What it's good for is the people transacting. I believe in prediction markets. I believe in tokenization connected to prediction markets. All of these things to me are going to happen, and they're going to continue to increase next year. The one thing that didn't happen this year, as long as Dan Ives is right and the stocks that he's following are doing well, people don't need Bitcoin. They don't need that innovation. What drives people into an innovative name like Tesla or Bitcoin, it has to happen when there's not as many opportunities and choices and things that are working that are bigger market caps. Bitcoin has a market cap where history will tell you when you get to this level, you're real. Like, you don't have to doubt it anymore. Could we go to 80,000? I guess we could if the stock market falls off. But I don't think the S&P is going to fall off. I think we're at the end of a liquidation of growth stocks, and that next year growth will not be a good factor. Growth has a variety of times where it doesn't work. Bitcoin is heavily, heavily correlated to retail trading. It's heavily correlated in the short term to growth. If I'm right and growth isn't going to work the way that it is, this is not a value trade. This is just, if the growth names are not dominating the market, then Bitcoin's going to start to be sexy again when it starts to trade higher. Price drives in the narrative, always, as Paul Tudor Jones said. It's something I believe in. The narrative is bad right now because the price is bad. If the price is back up, the narrative will be very good.
Is there any idea of like, maybe I just don't need more of it? Right? Like if it's 10% of my portfolio, I never expected it to be 10%. It's just grown so much. And I don't want to rebalance because I don't want to sell my Bitcoin, because rule number one of Bitcoin is don't sell. But a net new dollar going into Bitcoin means I'm going to push it higher than my 10% current allocation. Like, there's something about Bitcoin has still almost done so well. The hardcore Bitcoiners were never going to sell, and they wanted to become 95% of their portfolio. But this mass adoption kind of cohort, I don't know if they want Bitcoin to be 50 to 95% of their portfolio. Like, there is some number that once it gets hit, it almost feels like they're like, okay, I've got enough of that.
Right.
Is that something that you think could be playing out too?
Yes, but let me take let me break Bitcoin down into 4 quadrants of let's say buyers plus people that have bought.
Okay.
You have the ideological group. This is I wrote a paper about the difference between libertarian and democracy within inside Bitcoin. The ideological group didn't want IBIT. It didn't want it didn't want
hardcore zealot Bitcoiners.
Yeah.
Zealot not being a negative term, being a
Correct.
like, this is the essence of what Bitcoin is. They've defended Bitcoin through the
Peter
years.
Thiel, all that. So that's quadrant 1. And the great thing is they're the ones, just like with the internet, which again was a libertarian thing, which has turned into a platform thing. They came and they said, the government is wrong and we want to get away from this. Let's do this and let's break their stranglehold and control.
Mm-hmm.
Okay, that's one. And I think that's a lot of the selling that's been going on. And again, you get in early. It's a major part of your net worth. You need to diversify. And if you don't believe the ideology anymore, you should be getting out. Number 2, the second quadrant. This is the 2020 crowd. This is when I joined. I hear these people speak, and I will not name names. They believe—
Name them.
No. No, I actually, and the reason I say no, I'm going to say what I don't disagree with, and if they believe in this, they can go through it. They say that the dollar will get trashed, and the government is printing inflation, and it's all about QE, and that's why I need to be long Bitcoin. I don't agree with that crowd. And the reason is, the third quadrant, these are people in South America. You know what they're buying Bitcoin? It's the dollar. They want the dollar. The reason they want the dollar is because they don't trust their own government. So this gets back into the Michael Saylor thing of people that are talking about how the dollar is weak and inflation's coming. That is an educated, wealthy game story. Like that, hey, I'm wealthy. I have a lot to lose. You're screwing me. I want to buy Bitcoin. That was kind of Michael Saylor's story. But there's another part that he talks about, which is the people in countries that don't truly trust their government. We don't have debasement in the US the way they do in Brazil, the way it is in Argentina, the way it is in Zimbabwe and other countries where you literally are losing all of your ability to participate in the global environment. So that third quadrant to me is a growing part, and it's not going to stop. And they're the ones also, the on-chain volume of transactions, remittances, and that, a lot of it is happening in those, and they're going to continue to do it. And if you go through that A16 report, they show it. The final group is the portfolio diversification. And I want to remind everyone about the Rick Edelman story. And don't forget, his argument of like, you should have up to 40%. The reason was because we're going to extend our lifespan. So let me go back to the pharmaceutical side. How about next year, we start talking about curing cancer and curing all diseases, and people go, so wait, they start really understanding that they weren't joking about living a lot longer. Well, now you need innovation. You need things that are going to grow with you. I'm not saying everyone should put all their money into Bitcoin, but should it be zero, which it is for the majority of people? No. And you've just allowed the financial advisors and you've just allowed the banks to start getting involved. The portfolio diversification crowd, the one that's buying IBIT every day, that will continue to grow. They're buying from the first quadrant, some of the second quadrant. So I believe that's what needs to happen, is this has to go from ideology to wealthy people saying, no, I don't believe in the government, to people that are doing it for diversification and for actually surviving through government debasement. And I think that's a very powerful story in the long run. And when you add in the tokenization and the things where the wealthy people have these illiquid assets and they're going to need to get a price for them, private credit will be trading a lot better. Commercial real estate would be trading a lot better if someone didn't have 5 potential buyers and actually had 8 billion potential buyers.
Markets will have their panic cycles. That's nothing new. What changes is the structure underneath them, where the liquidity sits, who's selling, and who's buying. Jordi Visser's walkthrough reminds us that headlines are rarely the whole story. Look for the distribution signals, respect seasonality and structural flows, and only take trades with a clear edge. For Bitcoin, the shift from ideology to diversification and utility is the long-term story that will survive the next round of market noise. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.